Okay, it looks like we on. So welcome everybody to today's LinkedIn session. So we're expert live interview on LinkedIn, and we're gonna have about a discussion about one of the most pivotal issue shaping Africa economic future. So I want to talk to you about the critical mineral and also local industrialization. Yeah, and I'm thrilled to bring to you. Oh, one second. I think Yes. Sorry, guys. I think, like I said, so we live, and those are actually the challenge that we're having sometime when you go live. But I was just saying that I want to talk to you. I want to talk to you about an expert who is a leading on mining, resource government, and also industrial potential. And we know that the demand for cobalt, copper, rare earth, and also other critical mineral is surging globally. And African nation they face really a defining question. So will they remain supplier of raw material, or can they leverage this moment to build industrial ecosystem? That's what we're talking about here. We're talking about creating jobs. We're talking about capturing lasting value from geopolitical to rivalry to local value additions. So in the conversation today, what I want to do is to impact how Africa can really turn the mineral wealth into a transformative development. And my guest in here, Landry Djimpe, so he's going to give us insights that are invaluable to policymakers, to investors, to advocate across the continent. And I want to be asking him some key questions I'm sure you'll find interesting, right? So stay with us. So we'll be back in a second. Welcome again. So, how are you doing? I'm Tony, founder and CEO of Renewables in Africa. What we do is very simple. We raise awareness about renewables energy and also sustainability. So, if you're looking to break or expand into Africa, we are your eco bridge to this market. We can help you with three things: visibility, leads, but also deals. Or if you tell me I want to decarbonize, don't worry, we gain your eco bridge to sustainable pathway. And we can help with carbon footprint assessment, also carbon reduction strategy. But today, like I say, I want to talk about these very critical questions, right? In terms of the African minerals, who's really leading, who's really in charge? And it's a pleasure for me to welcome on the platform. So Landry, can you hear me?
I can hear you, Tony. Hi,
Excellent.
everyone.
Excellent. Superb. I know we're a little bit of a hiccup of starting. This is always the issue when you're going live, but it's a pleasure to have you here with me. And I can tell you a lot of people are actually expecting and waiting for this session, right? A few that are already connected, I could see. So, and for people connected, I would say don't hesitate to ask questions because Landry is here for that. And then I will be delighted. But Landry, just to give, I would say, give justice to people listening to us and people that may be new to you. Maybe it'd be worth you, first of all, introducing yourself. So that would be great.
Oh, thank you. Thank you very much, Tony. Thank you to Renewables in Africa for inviting me on this specific topic, which is definitely the talk of the hour. So a little bit of background on me. I'm Landry Djimpe. I'm managing partner at Innogence Consulting, which is a research and management consulting firm with offices in three countries, Côte d'Ivoire, France, and DRC, where I happen to be leading the office, and I also happen to lead the mining and energy practice for the whole firm. I got involved into mining maybe 12 to 13 years ago. I used to work in nuclear energy, so I used to work in nuclear logistics specifically, working for the world leader in nuclear logistics, France, and selling nuclear casks all over Europe at the beginning of my career. And since relocating to DRC 4 years ago, I've been very much involved into the mining space and the energy space as well. We could talk about that later. Mostly as a market analyst and a de-risking specialist as well for a number of funders and investors looking at tapping into the DRC's mineral resource opportunity. So I hope I'll be able to share valuable insights to our listeners today.
I'm sure you would be. You would be. like I said, there has been a few a few people already logging on, and as I say, so as you log on, so if you have questions, just drop it to me in the comment section. I'll make sure that I bring that to the front of the conversation. Yeah. So, like I say, we have a number of points that I like to touch on with you, right? Like I say, it's not every day that we have somebody of your caliber, an expert, understanding well the mining industry and everything around that. So, there's a few points that I want to cover, and I want to start by talking about the geopolitical competition and look at what could be African leverage there if it does exist. You know, we all know that China currently dominates Africa critical mineral supply chain. At the same time, we have the US and the EU pushing for diversification. So, according to you, how can African nation like the GRC strategically position themselves to benefit from this geopolitical rivalry rather than being cut in the middle, like it sometimes happens?
Okay. Thank you, Tony, for introducing with that. I mean, it's a very, very critical question. So today you have a lot of African countries with the likes of DRC that find themselves courted by major powers, right? All of them competing for critical minerals, and they can definitely turn that to their advantage. I mean, the intense US, China, or even I would say Western world versus China rivalry over mineral resources such as cobalt, lithium, manganese, rare earth, to name a few, means multiple countries are seeking deals. They are looking at making deals. And African countries can definitely negotiate better terms with that landscape. For example, they have the upper hand today to insist for foreign investment, not just to come and dig and ship, but also to build local infrastructure and processing facilities as part of the deals. I mean, we've seen China, specifically, being keen to negotiate a number of minerals for infrastructure swaps for years, building roads, railways in exchange for mining access. But now, as Western countries are also eager to secure non-Chinese sources for critical minerals, African government can demand the same. They can even demand similar or even stronger concessions from them, because and this not only adds value locally, but also create jobs and industrial growth for African economies. When you look at a country like DRC, for example, where I've been based for a number of years now, we are the leading provider of cobalt, providing more than 70% of the world's cobalt, which everyone wants for the electric vehicles, right? And the current President Tshisekedi, has skillfully leveraged that opportunity by offering the US greater access to Congolese minerals in exchange for support, linking it to security assistance in the conflict-ridden eastern side of the country. So this is a bold move where countries today can say, okay, if you want our critical minerals to compete with China, then help us with stability and development. So this kind of bargaining is possible because there is geopolitical competition as well. If we're talking just with one player, he will be the market designer. But given the fact that there is competition today, then we are able to have this kind of competition. So the key for African nations is to remain non-aligned and rather flexible, welcoming all partners because everyone has something to bring on the table, but negotiate tougher terms than what we have been able to do up to now. So
Okay. Yeah, go on, carry on, yeah.
no, I mean, just to close, maybe, I mean, benefiting from the rivalry also requires good governance on our side. So countries must manage their contracts, I mean, transparently and avoid being shortchanged in the rush. So navigating the geopolitical rivalry would definitely determine the long-term benefits that we would derive from our mineral wealth. So this competition is definitely an opportunity for our countries.
I'm very happy to hear that. And as we're talking about the security for access of resources, that's also the same kind of deal that we've seen the U.S. president doing with Ukraine, right? So clearly
Exactly.
something. And I must admit, we're talking about that right now, but you and I know that this kind of deal have existed long before we were actually even born. So it's not something new. It's maybe something like say it's much more. I would say it openly, but back in the days, definitely was in the back doors. So thank you for this initial insightful comment. Like I say, so it's really a topic that attracts and interests a lot of people. So you talked about Tshisekedi here, DRC. DRC, it's central in this question in Africa, right? In terms of mineral wealth, they're probably the country in the continent, maybe in the world, with the biggest amount of resources. I mean, from what I've heard, obviously. So we know that they supply about 70% of the world cobalt. I know it varies, 70, 80%. However, significantly a lot of cobalt, the large majority of cobalt, from sources reported coming from this country. But it captures minimal value due to raw exports. What do you think are the concrete steps? Because also I must say that you obviously live in Kinshasa, so you also have a close understanding what's happening in that country. What kind of concrete step can the Congolese government and private sector take to move up the value chain, from mining to battery production, for example?
Yeah, so I mean, the cobalt question for DRC is definitely something very strategic. For decades now, the DRC has been the world cobalt giant in mining. But the irony is that most of the mined cobalt, sorry, is being shipped unprocessed or just as crude concentrate. And the real money is being made outside of DRC. It's
Yeah.
being made where copper is refined into battery grade chemicals. And all of this is being done outside of DRC and it's often being done in China. So I think DRC definitely needs to climb the cobalt value chain, and both the government and the private sector has a role to play in this. And to change this, the first thing I think is definitely for the government to push for investment in domestic processing capacity. But we've been seeing promising moves, I would say, because when you look recently, the government recently funded the partnership with a local company called Buenasa that's looking to build like a new cobalt and copper refinery in Lualaba. And this plant is normally expected to produce around 5,000 tons of cobalt sulfate by 2027, which will be a game changer. It means with all the cobalt that is being exported today just as raw material, from as per 2027, DRC should normally be starting exporting battery-ready material, and hence really like creating local value addition for the whole industry. So DRC is definitely positioning itself and plugging into the middle of the battery supply chain. No more staying at the bottom. But then the government needs to go further than this. And normally it can definitely help set up an enabling policy framework and infrastructure. I mean, the government today has developed an industrialization master plan. And in this master plan, they are using tools like special economic zones with tax incentives to attract battery and precursor plants. And this has also led, by the way, DRC to form a battery council with Zambia. As you might know, DRC and Zambia are in what they call the African Copper Belt, and both of them are significant players and providers of copper and cobalt. So they are leveraging their position to build a joint initiative to create a regional battery value chain in this region. And collaborating with neighbors definitely expand the resource base, because when you look at DRC, world leader in cobalt, you look at Zambia having significant resources in nickel and manganese, that creates everything needed to have the nickel manganese cobalt battery. And it gives room for a full range battery component being made in Africa. We also need to secure support from a number of partners, and it's already being done for some. Guys like Afrexim Bank or the UN Economic Council for Africa are already coming into play and funding feasibility studies and providing initial financing for these projects. But then the private sector as well has a role to play, notably in bringing in technology and capital. I mean, local but also foreign companies should be able to seize the opportunities and the incentives the government are putting into play to build locally based refineries, cathode material plants, and maybe one day, who knows, battery assembly lines in the DRC. So we have already Congolese entrepreneurs that are stepping up, like I was talking about Buenasa earlier. But then we also need to have other stakeholders coming in. But of course, I mean, moving up the value chain isn't just about factories and smelters or refineries, you call it, but it's also and specifically about skills as well. So there is a need to partner with universities to train Congolese entrepreneurs and technicians in battery technologies. This is definitely very important, and the government should play its part in that and require a skill transfer program as part of any refining or mining licenses they are giving. Another aspect of this is infrastructure, which is critical. I mean, when you know and when you're knowledgeable about the DRC's mining space, you know that infrastructure is definitely one of the biggest challenges. Having access to reliable power supply, having access to roads and clean water is definitely needed for high-tech processing facilities. So DRC must reinvest some of its mining revenues to fix electricity, notably its bottlenecks. And after all, I mean, no smelter or refinery can run on generators forever. So we definitely need to address electricity problem at some point. And finally, like I said, the policy stability as well is important. The challenge we have in most African countries is there's a certain level of volatility as per policy. So, but investors are only willing to build, especially downstream facilities, if they trust the rules and the regulations at play won't change suddenly. So Kinshasa might need to maintain a consistent, transparent mining policy that rewards local value addition.
That's very interesting. I think there is a question that somebody asked. Probably going to come back to that in a minute. But let me just carry on with a couple of questions that I have, and then after that, we do our best to include, because there's some questions that people have already asked. I'm glad. So thank you obviously for doing that. So if you have questions, please drop them in the comment box. So we'll come back to that. So if there are a lot of questions, we may not necessarily take all of them, but we do our best to capture as many as possible. So Landry, very interesting what you say. So you talked about the neighboring countries as well. You talked about the fact that GRC is collaborating because of the copper belt of the area. So with Zambia, excellent. Now I want to talk about two other countries that obviously possess rare earth in Southern Africa, South Africa and Malawi. So they have a significant deposit as well, and they remain to some extent underdeveloped, especially more Malawi than South Africa. What lesson can this country learn from global model, like for example Indonesia nickel strategy, to avoid what we talk about what we call the raw material trap, which we seem to be into?
Yeah, so I mean, it's very, very interesting. I mean, we're talking about South Africa and Malawi for rare earth. We can talk about Gabon, or for manganese, we can talk about Zimbabwe for lithium. I mean, just name any country. We've been talking about DRC with cobalt. I think one country we can definitely look at if you want to really address these things and make sure that we avoid the raw material trap is Indonesia. I mean, when you look at how Indonesia's nickel boom, how they had to manage it, it can provide significant and powerful lessons for African countries like South Africa and Malawi as they look at to develop their rare earth and other critical minerals. I mean, in the last decade, Indonesia transformed itself from a mere raw ore exporter into a key player in the global battery supply chain, largely by leveraging resource nationalism to its benefit. This is definitely, I mean, they basically said, if we are done exporting cheap nickel, or if you want our nickel, you have to process it here. No more exporting raw ore. So Indonesia literally imposed export bans on raw nickel, forcing companies, especially Chinese investors that were hungry for nickel, to set up processing plants and refineries locally. The results were tens of billions of dollars in foreign investment poured into Indonesia's nickel smelters and battery material facilities. So today, I mean, we're talking about an industry that would used to generate $3 billion of exports when they were exporting raw ore to more than $30 billion of processed nickel. So Indonesia just doesn't dig out nickel. It ships high-value nickel alloys and battery precursors, capturing more of the value chain at home. So if you have to bring it down to what we learned from there and bring it down to South Africa and Malawi, which have significant rare earth elements deposits, I think the first lesson, like we said for DRC, is value addition at the source, definitely. So these countries should aim at refining their rare earth domestically or within Africa, where it is feasible, so they can export higher value products like separated rare earth oxides or even magnets. Who knows? This might involve adopting policies similar to Indonesia for like restricting exports until processing happens locally. But then there can be a real caveat. Policy must be realistic and well timed. I mean, just blanket export bans can
Mm.
backfire if you don't have investors on board or if alternative suppliers elsewhere fill the gap. The African Development Bank and I think other have noted that such bans often fell short in Africa when tried in the past, sometimes harming even the industry by cutting off revenue without immediately spurring new industries. So South Africa and Malawi might consider a more phased approach.
Mm-hmm.
Incentivize local processing, tax breaks, infrastructure support, and everything, and declare a future cutoff date for raw exports once a refining or processing capacity is in the works. So another lesson we can learn from Indonesia as well is foreign partnerships. So Indonesia was able to do what they did because they courted foreign companies, like
Mm-hmm.
I said, Chinese firms, to build the downstream facilities. So South Africa and Malawi can do the same. They can actively seek strategic investors from China, Japan, EU, US, I mean, anywhere. We've been seeing the South African president have been engaged in significant conversations with the US. I mean, they can definitely have that in the agenda as well. And courting investors that are willing to invest in local processing capacity. And we know, for instance, that the global manufacturers are desperately looking to diversify rare earth supply away from China's dominance. So it's definitely an opportunity. And then we can also have another thing to have a look at is developing supportive infrastructure and skills, which is also something Indonesia was able to do by creating mining industrial parks with
Mm-hmm.
power plants, seaports, and everything to make it easy for investors to set up processing, but also to be able to ship out easily the processed resources. So African government can definitely designate special economic zones like we talked about for DRC and Zambia, but then they can do it also for rare earth, why not, between Malawi and South Africa. And we can have special economic zones for critical minerals. For example, a rare earth industrial zone with reliable electricity and maybe even shared facility for extraction for these minerals. Training the workforce is also key. I mean, processing rare earth or even like battery metals is something very, very technical. So partnering with university to produce metallurgists and chemical engineers is part of the long game. And lastly, regional cooperation must be used to amplify success. I mean, if Malawi has rare earth and South Africa, for example, has a better infrastructure or even industrial base, they might collaborate. Maybe Malawi can ship part of its raw concentrate to be processed in South Africa's facilities under a revenue sharing agreement. And the African Continental Trade Area Framework encourages kind of cross-border value chain formation. So it's about pulling the strengths together.
Mm-hmm.
One country's resources plus another one's industrial capacity can together achieve what neither could achieve alone. So in summary, South Africa and Malawi can learn both from Indonesia that brought out strong resource-oriented policies. And they shouldn't be afraid to demand in-country value addition, but they also should work on their part as well around upskilling and building the necessary infrastructure and also collaborate to create more value out of that.
Yeah, I was going to ask you a question about how could African nation can better negotiate the deals that, but it looks to me that you've covered that, in obviously looking at what Indonesia has been doing, so to attract foreign investors because many mining contracts here favor foreign investors probably because the skills are there, but they need to follow the Indonesia example and other good best practices out there to secure local processing, skill transfer, and also equity stake. I think you cover that. Is there anything that additional you want to mention there, or am I okay to move to the next question, which I'm sure you will like?
Yeah, sure, definitely. No, I mean, we can move. I mean, you've covered it quite well.
Excellent. So let's talk about this something that we Africans, right? Those we love this kind of question, resource
Yeah.
curse. we hear it on a regular basis. So it's almost like we are afraid to become rich, right? We have those resources, We're happy when we obviously have a new, obviously, a new area that we discover, right? So a new, but a new plot. but at the same time, we're scared because we start thinking about all the bad examples, which is funny because we could be thinking of the successful example, but we don't. But that's human nature. So historically, those resource-rich African nations, they've struggled with corruption, instability, and economic dependency. And certainly has been true for DRC. I'm not obviously saying that just to uh, put on some bad publicity on the country, which is certainly not my intention and allow the country for sure. But it's also important for us to recognize some of those facts to see how we can learn from that. So, what governance and policy frameworks are needed, according to you, to ensure critical mineral become a blessing, not a curse? I like to be sitting with you in 5, 10 years time and say, wow, how could we get more of this blessing? So, what kind of governance and policy framework are needed just to move from curse to blessing? What would you say?
Oh, okay. I think the key to that question around the so-called resource curse is governance. I mean, governance is definitely foundational. I think previously, before anything, I think African countries should have a clear strategy on where do they want to go, what is their mineral strategy. Just today, we're talking about critical minerals, right? We can talk about strategic minerals and all these terms. Who sets the terms? Who
Yeah.
defines them? Most of the times, we are just like trying to follow behind other people's agenda. But what is our agenda like on the African continent and for the mineral-rich countries themselves? That for me is definitely the first thing. Then transparency and accountability must be front and center. This means countries should adopt and embrace things like the EITI, the Extractive Industries Transparency Initiative, to make public all payments mining companies make and all contracts signed. This is definitely something very, very, very important, because once the deals and the revenues are out in the public, it is much harder for funds to be siphoned out or mismanaged, isn't it? So, I
Absolutely.
mean, but today, unfortunately, 70% of African countries, or even more, with big transition mineral reserves, rank in the bottom half globally for corruption. And only a small minority of major producers disclose most of their mining contracts, which is a shame. I mean, so turning around is step one. We need to shed more light on this sector, and government can set up even independent oversight bodies to monitor resource revenue spending. And anti-corruption measures, from strong auditors to digital payments, are essential so that mineral revenue builds schools and clinics, not just offshore bank accounts. Sorry. Second thing is we need the policy frameworks like the African Mining Vision, which was adopted by the African Union and basically lays out a blueprint on how to use mineral resources for broad-based development rather than letting them become a curse. I mean, this African Mining Vision emphasizes on diversifying the economy, local mineral beneficiation, and social and environmental responsibility. I mean, countries should domesticate these principles into their laws. And it's very essential. When you look at a country, let's say like Botswana, for example, they did set up a sovereign wealth fund that from the early on, that helped them save and reinvest diamond revenue, which helped them stabilize their economy and avoid the boom bust cycle that we often see with oil-rich African countries. So setting up a sovereign wealth fund that can ensure that a portion of the mineral income is saved for future generations and invested in infrastructure and education it's paramount. It smooths out like volatile swings of commodity prices so that when prices are high, you save, and when they are low, you can spend from the fund to keep the budget steady. Another thing which is very, very important and that we don't often see is economic diversification. It's a must-have in the framework. I mean, resource chaos often strikes when a country becomes like a one-trick pony. Everything is about either oil, copper, cobalt, and the other sectors start withering. So government needs policies that channel mining income into developing agriculture, manufacturing, tourism, energy, digital space, anything. But you need to diversify everything from mining. So it's essential to use the finite mineral wealth to build like infinite human wealth, if I can say.
Mhm.
So you need to invest heavily in education, skills, infrastructure, encourage local entrepreneurship, having the right policies in place to grow like local supplies around even the mining sector. This is very important. You need a strong legal and environmental framework as part of the government itself, the governance itself. And then finally, you need like a fiscal discipline and planning. Sorry,
That's fine.
sorry. I think I'll drink a little bit of water.
No problem. Yeah.
Thank you. So government needs to guard against the temptation of overspending during booms, because we've seen it in a lot of countries where when you have a boom, a commodity boom, there is overspending, and then when it bursts, the country left with little or nothing. So we need to avoid that. So this involves adopting like fiscal rules, limiting how much, for example, limiting how much of resource revenue can be used in the annual budget. This is what countries like Botswana again did. They treated diamond revenue as an investment fund for national development priorities, and they were careful not to let it distort their currency or cause inflation by flooding the economy too fast. This prudent management helped it become an upper middle income country, largely escaping the classic resource curse. So yeah, that's what I could say about the mitigating the resource curse for our mineral rich countries.
Thank you for the very extensive responses there. I think there's many things that were very, very interesting. And like I say, that's a question that come back over and over again. And I would encourage people definitely to reach out to you if they want to go even further, because I say you have obviously a consultancy company. So going much more in depth into those questions. We can't cover all of them with
Exactly.
the right level of insight that are required, because it would take few hours, probably a few days there. I have a couple of quick questions that I want to ask you, but after that, I'd like to go back to the question that we've received. Yeah, just to, as I say, make sure that we also look after the people watching us. So you quickly mentioned that, but I'd like to come back and re-ask you the question where you were assuming that, not assuming, you were hinting that African countries should maybe benefit from pursuing a unified approach, something like a OPEC for minerals, in order for them to strengthen their bargaining power. So I got a feeling that you were suggesting that is probably more effective than negotiating bilaterally with a big player like China, US, or the EU. So would you say that's what you were actually suggesting?
Oh yeah, yeah. I would say yes and no. I mean, I think I have strong arguments on both sides, either going for the OPEC or even going by themselves. So, I mean, speaking with one voice definitely increases Africa's bargaining power, right? I mean, by some estimates, we hold approximately 30% of the world's critical mineral reserves. So, if we coordinate our asks as countries, for example, agreeing across the board that no country will export lithium or cobalt without at least some value addition, or setting a common floor on royalty rates, for example, this could avoid undercutting each other.
Yeah.
It prevents country A from demanding local refining, so the investor will run to country B because he knows he can get a better deal there. But if he knows we have like a collect one voice, we then build a collective leverage like you can have in the oil. But then building an OPEC for minerals is quite challenging because OPEC is one commodity, it's just oil. Meanwhile, when we talk about Africa's critical minerals, we're talking about cobalt in DRC, Zambia. You're talking about rare earth platinum in South Africa. You're talking about graphite in Mozambique. We were talking about rare earth in Malawi earlier. So it's quite heterogeneous as a market, so difficult to catalyze, I will say. But then we can build like commodity-specific alliances, or at least kind of a policy coordination. So you can have like countries, let's say DRC and Zambia, which together which control like a huge chunk of cobalt and copper today. And they're already teaming up on battery value chains. So they could conceivably coordinate production and even pricing strategies down the line, which we can even quote it like let's say like a cobalt OPEC. They can definitely build like a cobalt OPEC among the between the two countries, or countries like having like major lithium reserves. You talk about Zimbabwe, Namibia, Mali, even DRC. They can even share notes on how to not to underprice the resources. So, and the continental body could help facilitate these multi alliances and ensure like information sharing between both parties. But then the downside is getting countries to agree and stick on the unified approach is hard. I mean, each country has its needs and its political pressures and its own agenda, right? So one might desperately need foreign investment, like fresh cash now, and be willing to sign a quick deal, and then unity will be damned, definitely. So there is also the issue of enforcement. Even OPEC itself struggles when members cheat quotas. So Africa will face that too. I mean, definitely. So how do you prevent the country from breaking the engagement for a side deal? So the risk of not unifying is that Africa remains a price taker and policy taker instead of a price setter and policy setter, because we are the ones having the resources. So without a unified vision and regulate and regional coordination, Africa could remain just a mere exporter of raw resources, missing the transformative potential of its mineral wealth. So I would say a middle part is emerging. We must not form a formal cartel with quotas and everything like we can see with OPEC, but we can definitely have a coordinated strategy. And the African Union or even regional blocs can definitely develop model mining agreements and mineral policies that member states can adopt. For example, ECOWAS, for example, which is definitely the continent's most advanced regional bloc as per policy is concerned, can develop a common mining code framework. We have the Africa's mining vision, as mentioned, but it's kind of a template. It's not really pushed on the African countries. So we need to have shared standards, definitely, for us to have a bigger local beneficiation on the continent.
And that's what I was saying to people here. So I needed policymakers to make sure that they tune in to this conversation, because there's a lot of very interesting nugget that Landry is just dropping here. So if you know any of them, make sure that you tag them even after the conversation, because it's going to be live on our YouTube and our LinkedIn. And by the way, if you're watching from any of those platforms, make sure they subscribe to our channel. Tag those policy makers so that they can listen to the conversation, because here is a man that has a lot of knowledge working and dealing with a lot of investors out there and having a good understanding of best practices, who can actually give us very good information here. So I have one more question before we turn into the question from the audience. So you talked about lithium, right? So beyond mining, so there's a lot of conversation about the EV industry, which is growing, especially for the 2 or 3 wheelers, and batteries as well, right? Battery swapping, I'm sure, a thing that you've heard. How can Africa build a full battery EV supply chain in the continent, if you know anything about that? And which country would you say are better positioned to lead in refining, manufacturing, and recycling, and the partnership that they need to make it a reality?
That is a tough one. I mean, building a complete battery and electric vehicle supply chain in Africa is an ambitious goal, but it's definitely increasingly within our reach. I mean, it basically means everything from mining the raw material to refining them into battery components and assembling those batteries, and even manufacturing the electric cars themselves on the African soil. But to achieve this, as you said in your question, several countries will need to play to their strengths in a complementary way. I mean, on the upstream end, right, on the mining side, countries like DRC and Zambia are definitely pivotal. They sit on huge reserves of cobalt, copper, and other battery minerals like nickel, manganese, name them. So they have already started by creating a joint special economic zone for battery precursors production between both countries. So you can envision cobalt and copper being mined in the DRC Zambian copper belt, being processed into cathode materials right there in Central Africa, instead of it going to Asia. So that could be the upstream side. When we move middle stream now, we have countries like South Africa and Morocco that are strong candidates to lead in manufacturing and assembly. You look at South Africa, for example, it has a well-established automotive industry, produces hundreds of thousands of cars annually for companies like BMW, Toyota. And why those are mostly combustion cars now, that industrial base and skilled workforce can be pivoted to EVs. with right investment, right? So you have Morocco, for example. It's a rising star in automotive manufacturing. It's already making moves into the EV battery space. It 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 has a more than $1 billion project with China's one of China's biggest EV manufacturer to build the first gigafactory, which is supposed to start production by 2026, if I can recall. So this plant will produce not only battery cells but also cathodes, largely for export markets, leveraging Morocco's proximity to Europe as well. So Morocco hosts multiple EV-related investments. And you have a number of Chinese firms that are setting up facilities to make battery components there, like cathode foils and cathode materials near Tangier and Casablanca, because they want to leverage a free trade access to Europe and the US and the existing car industry, because you have manufacturers like Stellantis and Renault that have facilities and they're pumping out cars out of Morocco. So Morocco and South Africa can be the assembly hubs where battery packs could be put together and cars assembled using the materials coming from DRC, Zambia, and others. But then other countries can play a significant role as well. Zimbabwe has significant lithium reserves, one of the top in the world, and is eager to move up the chain by at least doing lithium processing domestically. You have countries like Namibia that also have lithium, so we're talking about refining at home. But then you have countries like Ghana, Cote d'Ivoire, where we're talking about Gabon, we're talking about manganese and nickel processing potential. You have countries like Kenya, Rwanda, Nigeria, that are places that are already small scale, that already have small scale EV assembly, but also have strong startup scenes in the electric mobility space. So they could grow these niches with the right support. So to tie all this together, partnerships are crucial. No single country can do the entire chain alone, and African nations will need external partners too. So that's what I could say on that. But then there is a need for partnership, like I said. Intra-African partnerships is a game changer with the African Free Trade area. There's also government-to-government partnerships. There is a need to, like I said, collaborate between all the countries. It will not be an easy task, but definitely a must go if you want to bridge the gap.
Excellent. Well, listen, Andrew, so it's been fantastic. So we have almost 45 minutes here, but I want to squeeze in a couple of questions because I did promise that to the people listening to us. So I think, yeah, Landry, are you back on? Yeah, you're back on. Yeah, can you hear me?
Yeah, I can hear you.
Okay, excellent. I think it's time for us, like I say, to move very quickly to a couple of questions that I have for you. So stay with me for a second. Okay, so we back in here with Landry. So we're talking about obviously the mining industry, and obviously Landry's been responding to a number of questions that we had for him in here. And there's a couple of questions that people have been asking, and I'm very keen to tap into that very quickly before we part away, where we talk about the geopolitical scramble for African critical mineral here. So let me just share the question with you, and we can do. I'm not sure we can answer all of them because, like I say, we are almost running out of time. But it's a very interesting topic, so I want to do that. So I have Hera Pondo. I think she obviously signed up to attend that. Say, hey, Landry, you mentioned DRC is increasingly tying mineral concession to security agreements, such as the recent deal with the US. So, at the country, yeah. Do you see as a risk in prioritizing short-term security over long-term? Let me just see the full question. But I see what she said. Basically, she's concerned that this may actually be prioritizing, short-term security deals over long-term benefits for the country. So, what would be your question there? What would be your response there? Sorry, Landry, you still here? I can't see on camera, but I believe that you heard me. Yeah.
Can you hear me?
Yeah, I can hear you.
Okay. So
You heard the question?
I had no. Can you bring the
Yes.
question back?
Essentially, I'm just gonna summarize. You said that GRC has been tying mineral concessions with security guarantees. Yeah. So, and she was asking if there isn't a risk here in prioritizing short-term security outcome or a long-term benefit that could actually really get the country can get from those mineral concessions. I'm just summarizing what she said. Yeah.
Okay. So I think I will not be, I am not a security expert, right?
Yeah.
But from my observation, most of the security challenges we've been having and observing in Africa, when you talk about places like northern Nigeria or even part of northern Cameroon, even in some parts of the DRC, not necessarily the eastern side, which has a very specific history in itself. But part of the challenges there is also lack of opportunities for the local people. So they mostly feel like they are left aside by the central government. So I think the deal that the DRC is striking with the US is quite positive, very positive, I would say, because it's going to bring in the necessary investment to develop the resources and the minerals that are there. Is going to, like I said, if the government is willing and putting in place the right policies, especially around local beneficiation, it is definitely going to create a whole lot of jobs in the region. So it is definitely going for me to be an accelerator of development in the region rather than a hindrance or letting away the mineral resources. So I think it's definitely a plus having that deal with the US because it can definitely bring investment, technology, jobs, social economic development, and everything into that.
Yeah, and I would agree with you in that. Just like I say, I'm not a security expert either, but I would say you can't get the long term benefit if you don't have security around it. Definitely. So,
Definitely.
as
I
simple as
mean, definitely, sure, sure.
yeah.
And it's interesting because I was talking to a number of investors last week that were looking at deals in the Katanga region, and they were concerned by what was happening in the eastern side of the country. So,
Yeah,
like you said, you can't talk investment without security.
yeah, that's the first. And in any country, the
Exactly.
very first job of the government it's really to protect first of all the citizen because if there is no stability, security, nothing else could happen. Excellent. I think Hera obviously she's been on fire. Let me ask another question from her. So, what are the most critical skills gap in DRC, not only in battery manufacturing but also in building strategic market intelligence data capabilities? So, I think the question continues, but let me just limit that at that because, like I say, we short time. What are the most critical skill gap you would say the country has? DRC, and we can probably, I'm sure, expand it to the other country that you mentioned, like for example, Zambia, so Zimbabwe, Namibia, and so on and so forth.
Yeah. So I think there are a number of hard skills, like she said, not just the battery manufacturing for sure. So I mean, everything around the technical side of the equation, be it from the upstream mining, midstream transformation processing, and downstream end product manufacturing. But then also you have skills around finance, contract the negotiation. I think one of the biggest challenges of our countries is most of its negotiators or the negotiating teams are not always very accustomed to the latest trends in mining contract negotiations, right? They're not always the most skillful. They've not always been the most skillful people. So I think there is a need to train and to upskill people around contract negotiation, mining finance, everything around the technical side, like I said, it be it upstream, midstream, or downstream. So there is a need for training like across the board, 360 degrees. There is a need for training every like everywhere. We need to definitely upskill our people because the people we are negotiating with have people that are very, very skilled at negotiating, and then they are always taking the upper hand because they're more prepared than we are. So, yeah.
Excellent. Thank you very much for that. I think last question before we wrap it up. So that's a question that I received from one of the obviously audience, which didn't want to be named. So you mentioned processing mineral locally, but doesn't Africa lack the infrastructure and energy supply to compete with Asia? So what's the first step to change that? And that's a very good question because this is a global market. So as much as we
Sure.
want to develop Africa for sure and get the continent to profit to benefit from that, we should global market. So when you're talking to investors, if he can find the same thing that you offer him for cheap somewhere else in better conditions, he's gonna go there. So so we need to be able as well to be able to compete. So what would you say to this question?
Yeah, I'll say we definitely lack the infrastructure, be it roads, railways, energy. But then that's why I said, for me, to avoid the resource curse, we definitely need to have a clear vision. And from that vision, you need to have an action, a phased action plan. And definitely investing in infrastructure is definitely important, very, very important. So we need to have the right incentives to attract investors that are going to invest in the infrastructure, be it energy, railroads, roads, name them. It is very critical because, like you said, we are in a globalized economy. So we will be competing. Our processed minerals will be competing from guys from elsewhere, be it from Chile, Peru, when we're talking about copper, be it from Indonesia, if you're talking about nickel, Australia for whatsoever other minerals we're talking about, or Canada from there as well. So we definitely need to make sure that we have the right incentive. Our vision is really to derive the most value locally. So that must help design an action plan that will have as first steps having the right incentive for investment in the infrastructure we are definitely lacking today, be it energy or roads. And the thing is, as our mining sector is developing and booming, as we can see today, new discoveries every day in almost every side of the continent, the need and the gap in infrastructure is growing bigger and bigger. So we definitely need to address those infrastructure gaps as early as possible.
Excellent. Thank you very much for that, Andrew. So we're coming to the last part of the conversation, and that's usually, I would say, sort of a tradition. So for our show, and then I didn't mention that to you before because I wanted to make it as spontaneous as possible. But it isn't a trap. It's very simple question. It's say you have 1 minute, and you decide who you want to be talking to. You can talk to either project developers in the sector or investors in the sector because both have a strong interest in what you are saying. So you decide who you want to be talking to, and you have 1 minute to convey them a message, whichever message you want. So who would you want to speak to? The project or developer owner or to the investor?
Um, Definitely the project developer.
Okay, in that case, that's fine. So I'm just going to go on background. So I'm going to leave you the floor for just 1 minute. So whatever message you want to pass on to them. So they're listening to you. So what would you say to them? So let me go on the back in the background.
So, dear project developers, I mean, Africa, like we said, Africa today hosts what 30% of the world's critical minerals, and as you know, even more than I do, mining is a long-term game. Today, Africa has all the potential to be the new mining space globally. We have the resources, we have the local people, we have the population, we have the youngest population in the world. When we look at our peers, be it Asia, Europe, or the Americas, the population is either declining or fastly aging. Meanwhile, in Africa, more than half of the population is still young. So you have the workforce. What we need is we need you to come and invest in training the local population. These people have been working, they are eager to contribute to the development of this industry. We have to develop local value addition because if we have people that are rightfully incentivized for the resources that are being tapped under their foot, they will be the first promoters and they will be the first promoters of the mining projects on which you are working. So do not hesitate in investing in training the local people, investing in local beneficiation by processing locally and creating the jobs. And you should be willing to do it now and not to wait until there is no more sufficiently available skilled workforce in other regions of the world for you to come in, unless it might be too late or we might be losing time in upskilling the people for them to do that. We talked about security issues. This can be solved by increasing the local beneficiation. So far as people have access to jobs, the security risks are falling. Studies show that every day. So definitely, and in Africa as well, you have the best ores. I mean, the copper and the cobalt in DRC have grades that are 4 times more than what you can have globally. So we have the resources, the mineral resources. We have the people willing to work. We just wait for you guys to come and invest and develop this industry together. There are challenges for sure, but definitely together, helping us help and with coming and investing, and with the right policies being placed by government as we can see them being rolled out, we're definitely going to create more value for everyone. So you're welcome to Africa.
Excellent, excellent. I think that was a just clap for you. And I can tell you, as you were speaking, the number of people on watching on from YouTube, I noticed that obviously went up. So that was actually great. And it looks like there's somebody from Kinshasa was watching. Yeah. So certainly, soul, mind, spirit. So hopefully you've been able to listen to what Landry is saying. I appreciate that. So Landry, it was really a pleasure for us to have you and for you to come and share those insights with us from the industry. As I say, it's a very interesting space at the moment. It's always been interesting, maybe more so now, because there's clearly really a proper geopolitical scramble to get access to the critical minerals in this fantastic place, continent that is Africa. But we want to make sure that Africa is at the center and they take their own destiny into their hand, to the matter, and that's what you're here for, and that's why we have people like yourself. So thank you very much. So we're looking forward to have further conversation. I'm sure you're going to come and give us some updates from time to time. So I appreciate that.
Sure.
Thank you.
Thank you for having me. I mean, it's an honor to be on this platform and talk and exchange about this very, very important topic, which is critical minerals for the African continent and the local beneficiation, which for me is key in this conversation. So thank you very much. And thank you for everyone that took the time to listen to us.
Yeah, very quickly. So for people who wants to reach out to you, what's the best way to do it?
Oh, you can definitely reach out to me on YouTube, on LinkedIn. You have my name well spelled, Landry Djimpe. You can have access to that's and Twitter as well. Those are the two social platforms I have, and then that's it. And I might use your event to maybe do a little announcement if I may.
Please.
We will be launching this week something that we've been working on for a number of months. So for a little bit more than 2 years, we've been having what we call the DRC mining newsletter, which is a newsletter that gives positive narrative on the DRC's mining space and analysis on what is happening on the ground. And from the conversation we've been having internally and with other stakeholders, mining operators, regulators, and everyone, we're launching a podcast called Beyond the Mine.
Excellent. Wow.
Where we'll be talking with doers, shakers, thinkers of the African mining space. It will not just be the RC, it will be more Pan-African, and we should be releasing this first episode this week. So Excellent. Please follow my page, follow my name, or you can go and search for Innogence Consulting, which is my consulting firm, and then you'll be able to have access to that podcast once it's released. So thank you, Tony, for the opportunity to shout out to the world.
No problem. I think it's Innogence, just like that. Like Innogence Consulting.
Sure, definitely, that's it.
Excellent. That's fine.
Go follow the page and then follow. You will not miss what is coming your way.
Excellent. So you'd probably be happy, Landry, to know that there's a Trezeguet who say that, well done, guys. My team will reach out to you. So hopefully you should expect that person to reach out to you. And if there's anybody else, obviously you are. I know you are available. So thank you again. Like I say, well done and all the best for the podcast. So I'm really hoping that it goes well. So that anything we can do to support, we certainly would do so. So thank you for that. Appreciate that.
Thank you.
Thank you. So, ladies and gentlemen, I'm sure you've been able to listen to what Landry said. It was fascinating, right? So it's really a very interesting space. And I couldn't find a better person than Landry just to cover that with you. So thank you, Landry, for shedding the light on this complex but critical issue, from negotiating smarter deals to regional collaboration to having a bold vision of an African battery supply chain. Yeah. Your expertise leaves us with a clear takeaway. African minerals must fuel Africa's industrialization, not just global demand. And to the people listening to us, our audience, what I want to tell you is we've seen how strategic policies, governance, and also partnership could really define the continent's role in the energy transition. The question now is how stakeholders, government, private sector, and civil society can act on these ideas. Yeah, I want to continue the conversation offline. So keep on asking questions. I'm sure Landry will connect on those comments and response. Connect with him on LinkedIn, all the different places he mentions. So InnoAgence Consulting, that's his company. So follow him, listen to the podcast. I'm sure you're going to get lots of even better news, better information, and share your key takeaways in the comment. I really would appreciate that. If you haven't done it yet, subscribe to us to all our different platforms on LinkedIn, so on YouTube, on Facebook, directly. Reach out to me as well if you want to. And I'd be more than happy to discuss with you on other topics as well. So stay tuned for more discussions on our live. And thank you for joining us today. It was definitely a pleasure. Yeah. Thank you for that. Bye bye.